Hi, this is Andrew with Mock to Your Drop. In this video, I want to go over a concept from the financial reporting and analysis topic for level 1, which is revenue recognition for contracts. There's a lot of technical terms used with revenue recognition and dealing with contracts. So my goal of this video is to break it down in a little more intuitive way. I'm also going to run through a couple of examples of how to recognize revenue under a contract. So first thing I want to go over is, one of the nice things about dealing with revenue recognition for contracts is that you don't have to deal with the differences between IFRS and US GAAP like you would with a lot of concepts in financial reporting. Both of these standards are basically identical in how they deal with the concept. The only difference here is what each of the two standards mean by probable. Probable in the sense of collecting payment under a contract. Now, this isn't anything you need to be concerned about once we get into the examples, but just know that both standards have slight differences in what they mean by probable. Now, as we get into our examples, if I mention standard, it will apply to both US GAAP and IFRS. Okay, so let's get into our first example. Basically, customer C wants builder B to construct an apartment building, and customer C will pay builder B $100 to do so. That is what is meant by consideration. Now, obviously, these are not realistic numbers, but I want to keep things simple for purposes of this example. So customer C will also give builder B a $20 bonus to complete the apartment within 2 years. And this $20 bonus is what we call variable consideration. It's different from the $100 consideration to construct the apartment. So keep that in mind as we go through this example. Builder B also expects total costs to be $80, and it incurs $40 in year one costs. It also has limited experience with this type of contract, and factors outside of its control could cause delay. So now the standard indicates that builder B cannot recognize the variable consideration, in this case any portion of the $20 bonus, in year one if it can conclude that it will have to reverse the cumulative revenue in the future. So what does this mean? Since builder B has limited experience with this type of contract, and there are factors outside of its control which could cause delay, it may not be able to construct the apartment within 2 years. Therefore, it can't recognize the variable consideration, which is any portion of the $20 bonus in year one. Okay, so let's do the calculation and see what it can recognize in year one. So first we wanted to determine the portion of year one cost to total expected costs, which is going to be the $40 divided by the $80, and that's going to give us 50%. Now we multiply that percentage by the consideration, or the amount builder B will be paid to construct the apartment, which is $100, and then we get $50, which is the revenue from the contract that can be recognized in year one. So in the next example, we're going to take the same information from this one and go right into year two, but this time builder B will get a 1-year extension to complete the apartment in order to receive that same bonus. Customer C will also have a modification request for the initial contract. But before we do that, if you're getting value out of this video, please give it a like. It definitely helps out this channel. And if you want to see more videos like this, please let us know in the comment section. Also, don't forget to subscribe and hit that notification bell so you can get notified when we release new videos. Okay, so we just completed year one of construction, and builder B has recognized $50 in revenue. So now we're in the beginning of year two, and customer C wants to modify the contract to redesign the indoor pool for an additional $15 in consideration. So this makes the total consideration $115, since we started with the $100 in consideration at the start of the contract. Now it's important to note here that in order for the initial contract to be modified, the change would need to be for the initial goods or services in the original contract. In this case, customer C wants the pool redesigned. This implies that the pool was already in the initial contract. If customer C wanted to add a pool, which would be distinct from the initial good or service, in this case the apartment building, then they would need a new contract rather than a modification to the old contract. So something to keep in mind. For purposes of this example, this will just be a modification to the existing contract. Okay, so now builder B expects its costs to increase by $10. So total expected costs will now be $90, since we initially started with $80. And customer C will give builder B a 1-year extension to complete the apartment and to receive the $20 bonus, given builder B, which gives builder B 3 years instead of 2 years to construct the apartment. Builder B believes that it can complete the apartment given the 1-year extension, so therefore it now meets the requirements for that $20 bonus. This means that the total consideration for builder B is the $115 you mentioned earlier, plus a $20 bonus, which now gives it $135 in total consideration. All right, to recap, we take our initial $100 in consideration, plus the $15 for the pool modification, plus the $20 bonus for completing the apartment within 3 years. We get $135 in total consideration. This is what Builder B can expect to receive in revenue. Now, Builder B's progress towards completion is going to be based on the expenses. So if we take the year one cost of $40 and divide that by the initial total expected cost of $80 plus the cost of the pool modification of $10, which gives us $90, we get a completion of about 44%. So we multiply that by the total consideration and we subtract the amount already recognized, which is the $50 for year one, we get $10. So this is the amount that is considered a cumulative catch-up adjustment, and it's recognized on the date that the contract is modified, which in this case is the beginning of year two. Okay, hope you found this video helpful. Again, let me know what you think in the comments section, and if you'd like to see more videos like this. Thanks for watching.